Clay Patton on the Rural Radio Network. How did the markets fare this week? What seemed to be early pressure gave way to buying on Thursday, back to some selling on Friday to try and make sense of what seems to be a South American versus Russian, just a global production story as a whole. We're going to go to Darrell Holaday, Country Futures in Frankfort, Kansas. And Darrell, what do you make of this week's trade?
Well, you highlighted it well, the kind of the South America versus Russia, Ukraine stories, and also some better export numbers. I wouldn't certainly don't think we've turned anything around in that area, but just let's say some export optimism might be a better way to describe it. But we certainly did start out lower Sunday night and into Monday, and most of Monday lower, but you could just feel the market was coming. It came off the lows Monday fairly easy late in the session, and of course, the weakness was started by rain in Argentina over the weekend. As Monday progressed, thought, well, maybe we won't get the rain later in the week. Well, we did. We've seen rain Wednesday, Thursday, and some Wednesday, and then Wednesday night. Thursday was decent, and Friday was big. And to be honest, it rained most of the day on Friday, and it's going to rain most of the day at different spots of Argentina. On Saturday, and there's more next week. That on top of that pressured the market early. We also, I should mention, the moisture in the plains. We've had, moisture in Nebraska, moisture across eastern Colorado and western Kansas last weekend, and we had another system come out of Oklahoma, move up through the Midwest. So plenty of moisture in the plains. That also puts the market somewhat on the defensive early in the wheat market. But again, there's this optimism that China would come out of lunar holiday, which would be next week, which they were down, basically closed up this week, and be active in the commodity or grain markets, buying commodities, not only grains and ag products, but also others. Not sure that may be a little too optimistic. We'll see. But that kind of led to some buying on the brakes, and soybean meal also was really the backbone of the soybean complex, and particularly the March meal, and particularly the funds buying the meal. They've been big. They had record length when we started the week, and they added to that record length by the time the week was over. We did see a little back off and a little sell off from that high on Friday at midday, and that's really why we saw the beans reverse on Friday or end up being lower. A lot of this week buying the meal and selling that soybean oil, which everybody's been real optimistic about, that just really can't see it going below 60 cents a pound with all this renewable diesel that's capacity that's being built out there. But it did, and I think what also happened this week that is worth noting is, as we came to the end of the week with the rains in Argentina, we even see Argentine soybean meal now go $15 discount to the offers at the U.S. Gulf, and Brazil's been lower than the U.S. in every category, and those with the strength in the U.S. values, they actually that premium to the U.S. has over Brazil even became more. By the end of the week, it was 55 cents on the soybeans for March delivery, a premium U.S. over Brazil, or in other words, Brazil that offered discount. The soybean meal being offered at $42 a ton discount to the U.S. offers, and even the soybean oil 14 cents a pound below. So those are realities, and if you're really getting very optimistic exports, you just based on the soybean complex, Brazil's started to harvest beans. They're underway. Mato Grosso is where most has been done, and that's very good soils on the better area of Brazil, and the yields are phenomenal. I mean, they're literally like U.S. Corn Belt type yields. So we'll see if that holds up as we go through, but they've obviously had perfect weather other than Rio Grande do Sul. So that kind of is the South American, as you said, against the Russian-Ukraine situation. I think there's more tension there, the tanks, all of this going on, and some more shelling going on, missiles. It's terrible to say. I think to some extent the market's become numb to it, and certainly could develop into, as long as it's product moving out of the Black Sea, the market doesn't care, but in a minute there's a possibility that wouldn't happen. That tends to support corn and wheat, and that probably added some support this week as a whole. But in the end, all of these markets ended the week kind of up against fundamental resistance. I'm going to say fundamental resistance. I think there's also we could even call it technical resistance. But I think you're up against areas where it'd be hard to build on without some other fundamental issue developing, because we just really are continuing to, when you look at the corn exports, for example, and the wheat exports, we are just simply not on target to hit the targets we have, the USDA's projected. and soybeans are not at a good pace, but they're certainly not at a pace that would warrant any increase in those ideas on exports. March corn on the week up 6 cents at 6.82. New crop December, though, down 9 cents at 5.87. So you saw the bull spreads really move this week on the old crop, new crop. Certainly did in the corn. We saw it somewhat in the soybeans, not as substantial. March soybeans up 3 cents. New crop November beans down a penny. March Kansas City wheat 8.69, up 21 on the week. New crop July up 18 at 8.53. March crude oil down 196 on the week, having to kind of traded back and forth all week, and then was pressured on Friday and down 196, closing at 79.68. The cattle side, we had a showdown in the southern plains on the cattle. We finally got some cash cattle trade on Thursday in Nebraska on the pretty big volume at 155. Which was basically steady, and VL is probably steady, a little firm when you look at the overall average compared to the week before. As once again, Nebraska tries to dig through quality issues tied to weather, too much mud on a lot of cattle. So that's kind of made the market a little bit hard to figure out in Nebraska. So the southern plains set back all week, all day Thursday, all day Friday, and waited for higher. They felt, most feeders felt they should get $1 higher than the Nebraska top, and sure enough, it took till after the futures closed, but they got it. Got 156 and trade, and the Packers, who said they were out of the market once the bid was 156, all of a sudden they needed cattle again at 156. Packers tried to hold out and not pay any better than steady, and even tried to buy it at weaker because they just do not happy with the way the beef's moving. They don't like what they're having to discount the beef to move it. So that's certainly seen negative at prices, but supplies are tighter and current, and tonnage is going down with the weights continuing to drop, and that tended to give the leverage to the cattle feeder this week as long as they head out to the end of the week, and then they did. Hog futures lower. Again, we finally saw the bottom in the cash hog index. It finally came around about $2.50 below where we would have thought it would have, but it finally found that support at $72 and then actually bounced 3 days higher at the end of the week. The problem with the futures had is they look around and realize, my goodness, we're still $7 or $8 above the cash index versus the February and the April futures, and that's why we saw weakness even on Friday after the bottom in the indexes. Just got to get in line with the index to some extent, and I do think that index could move up and finish in the $76 to $78 level, but for February by mid-February. But once again, it already had a big premium, and that's why we saw basically a lower market across the board in the February hog contracts, but all the deferred contracts ended higher on the week. February cattle on the week unchanged at 156.72. The April cattle up 90, 160.82. March feeders up 250, 183.47. May feeders up 235, 190, 185. February hogs 75.87, down 195, and the April hogs up 72, closing at 86.45.
And that's Darrell Holaday, Country Futures, Frankfort, Kansas. You can always learn more at countryfutures.com. Do remember, though, that trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.